Monday, April 24th, 2:51 p.m. New York time. Good afternoon. Do some recap here on day trading. Day trading, the futures market. Futures are derivatives. They're one of several financial instruments that are derivatives. Futures market, the options market, the FOREX market, home insurance, auto insurance, life insurance, those are derivatives. So here on the futures market, day trading, regardless overnight, morning, afternoon, I look at the higher time frame. I'm looking at the daily charts to identify trend. So we're looking here at 9 grids of the broad market, and each of them being a daily. These are financial instruments that trade nearly 24/7. Yep, they trade overnight. So here are the S&P 500 futures. When I'm day trading these in the morning, obviously you have less data for the current day, but still I can identify if we took out the high or the low or still inside the range of the prior day. So the S&P 500 futures here, well, it's currently green, and it did take out the prior Friday's low and high. Look at here, the 10-year yield. Look at that. We're still inside range of Friday. Yep. Well, that price action that's happened so far today, we haven't been able to manage to take out the high or low of the prior day. It's on a 10-year yield. And the US dollar, well, red, broke below the low of Friday. Yeah, bearish. Massive consolidation, distribution, broke below. I shared that as a bearish bias trade signal last week to my Patreon members. Then we have here crude oil. Let's go look at crude oil. In bullish bias since last week, crude oil. Give you some insight. I was trading bearish crude oil up here and up here using options. I closed them all last week here. I closed them all over several days. They were profits, and I haven't done accumulation yet. I'm watching, but haven't bought them yet. Gold still inside the range, small trading range, still inside the range. Friday. Euro, higher high, higher low. Consolidation broke above it. No surprise. Euro is the largest weighted currency in the US dollar. Got the British pound, also broke above the high. Australian dollar, lower. Yeah, it's bearish. And the Canadian dollar also lower. So some correlation here you should understand if you're trading the financial markets, other than just stocks. Australian dollar, Canadian dollar, New Zealand dollar, and several other currencies are heavily weighted towards commodities because the majority of their nation's income is derived from commodities. What are commodities? The metals, gold, silver, copper, platinum, also energy, crude oil, natural gas, fossil fuels, dirty, coal. Yep, those kind of things are commodities. Well, the United States is much more diversified. So once we identify this on a daily, I go to the next. I go down to the 4-hour. That's the intraday. Because again, the daily, I'm looking for trend, the trend direction. And then the intraday on the 4-hour, I start labeling my zones, which I refer to as top down. So here we're looking at the S&P 500 futures. That's a zone because on the top it's considered a supply zone. The bottom is considered a demand zone. Why? Because prices touched it in the past and reverse went higher. We're here, prices touched the reverse, excuse me. Drink water. Mojito, margarita. Yeah. So all this price action is different now than what it was in the morning. You see, we're up here currently in a supply zone where sellers were in the past. Look at the 10-year yield. Huge reverse from Sunday night. Yep, that's right. These open Sunday nights. So again, trading stocks, you're limited the hours, and you're also at risk of being halted from trading. The futures market is a great financial instrument market. Again, not all financial instruments trade equal within each exchange. Plus, these all have options on them. And the US dollar, like I said, look at that, from overnight pump and dump. Yep. Look at crude oil, reversed above that zone. So once I label these zones from the 4-hour, and that's the euro. Look at that nice run up, big verse for the dollar. Then I take it down to the, enough on these, let's go down to the next time. I take it from the 4-hour down to the 1-hour. So again, I have my zones drawn from the 4-hour, but I adjust them if they could use any adjusting on the 1-hour. And that's what you see here is the 1-hour on the S&P 500 futures. A lot of whipsaw. That was the overnight low. That was the original overnight high. And then we came into it, broke above the overnight high. With a 10-year yield, that was the overnight high. That was the overnight low. Then when the regular trading hours come in, see this gray area? These are the extended trading hours, where the dark background, black background here is the regular trading hours. And look at the dollar. So once I do this on the 1-hour, I take them down to the 15 minutes. Again, I'm adjusting the zones because I might see something better that I didn't really see clearly on the 4-hour or the 1-hour. Yep. And identifying them. So example here with the S&P 500 futures. See here was a consolidation and a reversal. We had a trend down overnight. That was the S&P 500 futures overnight. We went down, reversal, double bottom down here. Yep. So drew a zone, and look at that. We came down, tested it, and reversed. Big bullish engulfing candle, bullish trade signal. Yep. Which I may not seen this on the 4-hour, 2-hour, but then see that there. 10-year yield, US dollar, crude oil, again, crude oil overnight went down, came into a zone. And gold. So that was probably during the London session, ran up to the New York session, sold off. Nice bullish pin bar after this sell-off, reversed, nice. Again, been bullish bias gold. Same with crude oil, but more bullish bias gold. And then look at the euro, nice run up. So looking here on the euro, it's been trending to the upside. British pound has been trending to the upside. Australian dollar, a lot of whipsaw here. Canadian dollar, same thing. So let's go down to the 5-minute. So on the 5-minute, I'm looking for triggers. Yep, triggers. Give you an example. I'm looking for prices to come into a zone. I'm looking for the candle formation to help me determine if it's time for the trade. So down here, S&P 500 futures. And then if it comes back down here, I get alerts, because I said alerts, comes down, test that zone, which is a prior command zone buyers. Alert goes off. I look at, again, the 5-minute charts. I'm looking for the candle, some kind of confirmation, give me a trade signal. And then when I put the trade on, I'll manage it even on the lower time frame, the 1 minute. I haven't get there in a minute. So this, I took one trade on this one today. And I took too many trades because I was managing several trades multiple times. So shame on me. Took a trade here. Went long. Got stopped out. Took a loss. That was on the S&P 500 futures, not the options, just the contract. Yep. I'll show you it on a 1 minute so you can see better. That's the dollar. Let's go to the euro. Took a lot of trades on the euro, and they were all winners. So for the day, I'm still green, but that did take a big hit on the ES that took away a lot of my profits. So here on the ES, sorry, on the euro, I'll show you again in a minute. Yep, 1, 2, 3, 4. So 6 trades total. 1, 2, 3, 4, 4. They were all long, closed them off for green. Let's go to the 1 minute. Oh, so let me show you some entry. So when I'm watching these, just like this, I have one of my screens, monitors, and then I'm looking at a screen with this template, see these 9. Then I have another monitor with just the daily, same thing, 9 grids, just the daily. So I consider it important to always know what the daily is doing. And then again, once I'm in the trade, so let's show you a few reasons I took some trades here, because the euro was trending better than the other currencies, and the dollar was trending down. See, dollar was down. Excuse me, dollar was down, euro was up. So when I saw this here on the 5-minute, I saw a retracement. I liked it as a bullish one. I was looking in reload, got in, and then saw this up here on the 5 minutes. So I kept on moving my stop up as soon as I got in, and this took me out. I got out somewhere not too far below here. Let's go some more. Now let's go look at the 1 minute. And then we're almost done with the video. So on the 1 minute, the S&P 500 futures, yeah, when I got in, a lot of chop, went down a little bit higher, had gains for momentarily, a few minutes, and then sold off and got stopped out because I was more managing my other trades. So shame on me for managing to try to do too many trades at one time. Yeah, I should have stuck with the euro, not do this one today, vice versa. Then here, the euro, got in there, closed it up over there. That was my first one. That was a nice big gain. And these other ones were even faster. And this last one, thank goodness I closed it, because I saw the market was slowing down, less price action. So I just closed it for a little gain. Again, I could have got stopped out and taken a loss, or if I had a wider stop, then I could have had a gain still. But I'm glad, even though it was a small profit, the small one, these other ones overall, and that's part of scalping, doing a lot of trades, real small dollar amounts, trying to make, not looking to hit home runs, not necessarily doing a lot of trades, but did do a lot of trades today. Again, try to make little gains on scalps. That's part of the methodology I apply